That's why if you're able to move the digital version quicker, faster, in a more seamless manner, you effectively transfer that ownership or that value from one person to another, or in this case, from one wallet to another.
We often talking about financial inclusion and get unbanked people into the financial ecosystem in a way to give access to assets or investment possibilities which was kind of unreachable for them, let's say even 5 years ago.
Solutions usually come up when there is a problem, right? And the problem with the financial sector is that it's a garden with big walls, and it's very difficult to get inside that garden.
There's like a lot of already existing problems which should be addressed with new technology and new solutions.
I think the future is quite bright. You'll probably see more institutional players looking at tokenization, looking at tokenizing funds, tokenizing other assets.
Ez a Token Talk Podcast. Hírek, érdekességek és aktualitások a kriptovilágából az Aprémió támogatásával. Mert nem minden kripto, ami fénylik, de egyébként olyan is van.
Sziasztok! Újra itt vagyunk, ez a Token Talk Podcast soron következő adása, ahol első külföldi vendégemmel, Azerbajdzsánban élő Shafiq Amirivel fogunk beszélgetni tokenizációról, a tradicionális pénzügyekről és a DeFi szektorról. Át is váltok angolra, magyar felirattal tudjátok majd nézni az előadást, úgyhogy vágjunk is bele. I would like to welcome Shafiq Amiri, my old friend and a crypto degen and the businessman around the Web3 cosmos. Hi, Shafiq. How are you?
All good, Gergo. How about yourself?
I am very good. Thanks for accepting the invitation for the Token Talk podcast. Usually we're doing this in a Hungarian language, but from time to time I would like to invite my international friends so that we can reach out to the Hungarian crowd as well and get the whole Web3 ecosystem in prospect, and we can add some special sauce to make sure that we generating a content which is kind of delightful and entertaining, but also educational on the other hand for anyone who's interested about the Web3 ecosystem, blockchain as a whole, and for example, tokenization as the new trend going through the Web3 world right now. And that's what mainly that we're going to be focusing and talking about. Maybe just to give a little bit of context for the listeners and viewers, if you can intro yourself and how do you get into Web3 and when?
For sure. First of all, thank you for having me. It's my pleasure. Who am I? That's a big question. I mean, I've been researching blockchain for quite a while now. I used to provide research reports for investment purposes, essentially back in 2016, 2015, where I first started, jumping into crypto. But then this crypto thing, it was too much for me. I started looking into the underlying technology, blockchain, which I thought was amazing. So I started diving a bit deeper into blockchain, understanding what it is, what the technology does, so on and so forth. And that's when I started doing blockchain research reports. Essentially, I did it for a very small amount of time, but the lock was there, and ever since then, 2015, 2016, I've been in crypto, blockchain. Now it's called Web3. But, I'm very happy to be part of the movement.
Lovely. Let's kick it off with our first major topic where you already gained a lot of experience as well, such as we did with Aprémió, tokenization. We've seen NFTs kind of hyped up 2-3 years ago. Right now, I think as the market is kind of getting more mature, and also institutional players and several other actors are taking a leap and a deep dive into blockchain technology as a whole. tokenization, real world assets, the whole cosmos is just getting more and more light. Let's put it this way. So, Shafiq, could you explain how, first of all, tokenization is revolutionizing or can be a revolutionary approach in the way we perceive asset ownership in the Web3 world, but also in comparison to Web2 or the real physical world?
I mean, I have a very different outlook on it, considering I always look at regulators as a benchmark, which is actually it's a good thing to do, but I put regulators as a benchmark of its adoption because regulators are seldom proactive. They tend to be reactive. So over the past couple of years, when I used to majorly engage in, let's say, in central bank digital currency, tokenization, digital assets, specifically with public sector, and that central bank or ministries of finance, what I saw was that a huge chunk of these public sector entities had tokenization as a very key focus of why they're taking a look at CBDC. And I noticed, if the government is paying attention in a proactive manner, then there is something special going on, right? And so that has always been a sort of a key understanding for me as to why tokenization is picking up. And of course, from the market perspective, NFTs was a big boom, and one of the main reason it sort of boomed is because it created a lot of value, or at least monetary value for a few people, right? So everyone wants to jump in where the money is, and so that sort of brought on a fresh pair of eyes every time the market would boom and then inevitably bust, which we can go into it as well. But every time the market booms, there's this new set of people coming in, and that's why with every new set of people, there's obviously the ones that are very fresh, who are very keen, who are very ambitious to get into it, and then there's a select number of people who are just builders, right? So every time the market would do pretty well, it would just bring in a fresh set of eyes who are going to start building new products, and that's what keeps people engaged in tokenization.
Lovely. Talking of which, what is the most up looking trend that you are excited about, and how your most advanced set of company is taking a leap on that? Invinex, right?
The story about Invinex goes back at the same time with all of this, our engagements with central banks came into being. Tokenization or securitization, or just putting a digital asset on blockchain, on chain, and seeing this sort of movement or idea being championed by the government set some form of a bell in my head that I think it's the best time to sort of get into it, right? Because we've done tokenization, we've done all of these stuff. We have a good record of collaborating with the government in terms of policy or just technology as a whole. So we started doing Invinex, and we started building Invinex, and the main idea about Invinex is that, listen, tokenization is probably going to be the best use case, the most productive use case of blockchain. That's my opinion. And you need to be able to provide value to people, right? Why, when we take a look at a business use case, it's usually the use case is just tokenization, right? Creating a digital asset of it. But what's the business use case? The business use case is either providing incentives to the market operators to use your platform, or save them money, or create a new stream for them to make money, right? And I think at Infinex we've sort of nailed that in terms of creating a way to tokenize certain assets, especially in the private markets and fixed income, to save people money, save investors money, save resources, create efficiencies, and I think that would set us apart.
I agree. We just tapping in, opening up the tokenization phenomena into the real world assets, or RWAs, or asset reference tokens, no matter how you call it. For the listeners and viewers, can you just put the whole concept in an easy to understand way in terms of like what advantages, when we talk, let's talk about bonds and funds now. So when we're talking about tokenizing, bonds and funds, for instance, what advantages do tokenization offer for these traditional instruments? In your view, what do you think?
So the RWA concept is you have an asset in the real world, the physical world, and you want to digitize it in a way that it represents the same value both on chain and in the world, right? So there's a lot of friction in real world. That's why if you're able to move the digital version quicker, faster, in a more seamless manner, you effectively transfer that ownership or that value from one person to another, or in this case, from one wallet to another.
Invest in the future with Apremio, the gold-backed token that combines the security of gold with the power of blockchain. Don't miss out on this innovative opportunity. Visit apremio.com today.
The funds in this case is again another solid use case. The reason being is that funds are usually so private equity funds in the private markets, they have access barriers, right? Meaning, in order for you to access a private equity fund, you need to have a certain credential, right? And this certain credential usually is that you need to have a minimum amount of money. This creates a very natural access barrier, and usually that requirement is a $250,000, right? Why do they need a $250,000 for you to access it? Well, obviously one of the reasons is to keep it exclusive. Private equity is the preferred asset class for sophisticated investors, the ultra wealthy, because of its potential for higher returns and diversification. But another reason is that it's going to be costly to accept everyone's money, right? As a fund, you don't want to accept everyone's money because you have to create like documentations, and it's just from an operational
overhead is just a big issue.
Yeah, it's one of the issue. So tokenization sort of eliminates that by digitizing it, fractionalizing it. And with fractionalization, what you can do is sort of accept funds, investor funds, at a lower level, but you don't have to sort of you don't have to give away or just lose any credibility over compliance or other form of responsibilities that you have as a fund manager, right? So fractionalization is a reason where blockchain can play a huge part in it. And then there's obviously atomic settlement, creating creative distribution networks, having a bigger investor pool or a new investor pool. So there's a bunch of these benefits that you can get from tokenizing funds.
So, if I understand correctly, then basically with this technology, we often talking about financial inclusion and get unbanked people into the financial ecosystem in a way to give access to assets or investment possibilities which was kind of unreachable for them, let's say even 5 years ago. So everyone can win in a way that smaller investors, private money on a small scale as well, can go into an opportunity which can give them a great upside as well. Meanwhile, these funds can widen their clientele, right?
Yeah, this has been, you know, financial inclusion. It's actually been quite a big proponent of what I've been doing, like previously as a sort of a CBDC consultant for central banks, and the banking the unbanked essentially allows you to utilize digital money without having a bank account, right? I mean, there's a lot of complexity, both from a technological and a regulatory perspective in creating that. But one of the reason of one of the another key issue of financial inclusion is that utilizing technology such as blockchain to create digital money, right? And then once you have a digital money, a digital currency, you can access digital assets, you can interface with it. So you create access, but then at that point, you need another thing, and that's education, right? Because education is important. That's a big imperative of creating access to private markets. It's like if the investor does not know what the investment is about, it creates trouble. That's why there's a lot of jurisdiction-based guidelines as to who you can get an investment from, right? But financial inclusion, at least from a technological point of view, if it can be achieved where a CBDC or a digital currency can be put into play, it can create that interface with digital assets. And then obviously digital assets, as any asset, has its potential for returns.
Understood. One step back before we moving on to DeFi and TradeFi and bridging the traditional finance with the decentralized one. I was on a debate last week, basically, with an economist who were giving me the example that by issuing mostly loans from the commercial banks, from the traditional finance sector, digital money is already in place, and that is the majority of money that we are using. And he says that blockchain and digital currencies would like to create a problem and then solve it, other than giving an answer to an already existing problem, which obviously I was debating with him about. But can you give your context, your viewpoint in terms of like how digitally created US dollar, for instance, can be different from a new wave decentralized cryptocurrency, and for example help better the unbanked people, of course under a jurisdiction, because I think we both agree that jurisdiction has to come in play. But what would be your answer to that question and idea?
I think solutions, or solutions usually come up when there is a problem, right? And the problem with the financial sector is that it's a garden with big walls, and it's very difficult to get inside that garden. So there is a problem already in the economic model. There's good into it, but there's obviously bad into it. For example, this lending situation, right? Lending is again one of the main use cases in blockchain and DeFi, is that it creates access to liquidity in a much in a much quicker fashion, right? I can give you an example of, like, in Azerbaijan, for example, the banks have certain thresholds of who they can extend a credit to, right? And how much they can do it, and obviously these factors come into play based on the central bank's guidelines, the internal risk mechanisms, so on and so forth. But in underdeveloped markets, right, that's sort of that creates a bit of an issue, because when a client needs immediate liquidity injections in form of a credit, a bank might not be the best lender over there. Either they don't want to, either they don't have the money, or that specific customer exceeds their risk allocation. So where do you look at it? So that's a problem here, right? Where do you look at it? If you look at a DeFi lending protocol, or for example, in Infinex, we're creating private lending instruments, both institutional and from an individual perspective. Borrowers can just jump in and request funds, and obviously we will have credit assessments, but this is a much more efficient way of doing it, right? Because we are not sort of constrained by very stringent risk parameters, which are good at certain areas, but banks are just regulated in a different manner, right? Because they usually hold deposits rather than private lending or private credit, which is an investment-based decision by specific lenders. So that really is something good. So it's not really just creating a problem and then finding a solution. It's just, there's a whole bunch of problems, and solutions are easy to think about.
Exactly. And we didn't even talk about the fact that usually when there's a downturn in global economy, then commercial banks tend to slow down with giving out loans, and probably that is the highest, the most alert time when these SMEs needing to give out loans the most, right? So yeah, I do agree with you. There's like a lot of already existing problems which should be addressed with new technology and new solutions, even finding out the way, which probably sometimes it's not going to be the best one, but that's how we evolve as a compact integrated system as a whole, on then trying and failing, and then moving towards to something which is going to be working in a better manner. Let's jump on to treasury risk allocation when it comes to Web3. How do you see it with inside of Infinex or at the global Web3 market? What do you recommend for managing risk for Web3 treasuries? How do you see that challenge?
We've heard a lot of stories in the Web3 world where it could be a DAO, it could be a NFT project, it could be any of these players where they raise capital, and they have either they raise capital or they have their treasuries, and then they start trading their treasuries, right? To sort of build it, which is not a good strategy at all. Treasury is there, that's your operating capital, and it can serve as your reserve, which a lot of projects, I think all the good ones, they have reserve capital in their treasuries, right? So what they do is they either trade it, which is a big no, or they keep it in a volatile cryptocurrency, right? And as of today, almost every single crypto, from Bitcoin to the latest to a meme coin, they are considered volatile. Now, Bitcoin is sort of becoming a mainstream asset, but nonetheless, still for the most part of it is considered volatile. So they keep it either in that crypto, or they keep it in stable coins. So the problem, the first one, trading, is just a bad strategy. You shouldn't trade your treasury's money. Volatile crypto, well, if you raise 1 million, right, and you keep it in ETH or Bitcoin or XRP, whatever, if that price goes down, your value of treasury goes down as well, right? So again, it's a bad decision. And the thing with stable coins is, although it's risk averse to the extent that the stablecoin issuer has their treasury in place, but even then it depegs. I mean, you take a look at Luna, USTC, Terra, which has depegged, and even I believe USDC depegged as well, because they kept a bunch of their money at Silicon Valley Bank, right? So it has its own risk. Where should you keep your money? You should put your money in a diversified, the reserves, at least you should diversify it in a diversified strategy. Put it in assets that generate yield, institutional grade yield, and that way your treasury is safe, and then you're also building on your treasury for a rainy day, right? I think that's the best case to do it. That's one of the use cases that we're building, a product that we're building at Infinex to help Web3 treasuries among institutional users, investment banks, family offices, to move their risk away and either put it in our tokenized funds, in our digital lending instruments, sovereign bonds, whatever, right? We're building on that.
Invest in the future with Apremio, the gold-backed token that combines the security of gold with the power of blockchain. Don't miss out on this innovative opportunity. Visit apremio.com today.
Yeah, Web3 treasuries and any treasury as a whole, either in the Web2 world, they can allocate their reserves in these specific asset classes.
Maybe Opera token has its own place at your own treasury as well, to make sure like the gold-backed utility-based token can have some sort of a risk mitigation asset on a longer run, right?
Absolutely. I mean, gold is a hedging asset, right? So a digital representation is just going to keep a lot of create a lot of efficiencies in accessing that asset. So why not? We can have APRA on Infinex.
Let's conclude here, because soon we will be about time. So looking ahead, where do you see the future of tokenization heading in the next few years? What do you see where, if we're going to have this Token Talk podcast in 2-3 years from now, what are we going to be talking about? What do we see that we kind of accomplish as an industry, and what might gonna be the major challenges for us?
I think in the next couple of years, you'll definitely have bigger guests on your podcast, asset managers, investment banks. I mean, just if we take a look at BlackRock's digital, tokenized fund, it crossed $500 million AUM in a month, or in a couple of months, right? Franklin Templeton, they've launched their own tokenized fund, U.S. government money fund. So the benefits is clear cut, right? Atomic settlement, 24/7 secondary market, less cost of transaction, increased accessibility to the markets, and the benefits are clear. So it's just a matter of time before asset managers jump on board, right? So in the next couple of years, what I would see is that tokenization would take a central role in a lot of investment committees, that they'll be taking a look at tokenization as a way to reduce their cost, to get a bigger investor pool, to protect their own investor pool, and to just operate in a much more efficient way. In terms of both tokenization and the Token Talk podcast, I think the future is quite bright. You'll probably see more institutional players looking at tokenization, looking at tokenizing funds, tokenizing other assets. You'll probably see regulators finding ways to create responsible legislation and policies to attract these type of players. And overall, the Web3 sort of space, we'll see that tokenization is how they can best interact with the structured financial world, away from the NFTs, from these pixelated monkeys and all. So all in all, the future looks bright for everyone.
Closing remark on Invinex for our listeners interested about how your platform works, what's ahead in your agenda, and how might people can join in to that community. Maybe you can just let us know where we can find you, if it's in a real life event or on Telegram or wherever, and then we can say goodbye.
Yeah, so Invinex, over the past 22 years, 21 year of them, private markets have outperformed public markets, right? So venture capital, private equity, they have outperformed public markets such as stocks and bonds, so on and so forth. So people don't know about these asset classes, right? We want to create, at Invinex, we want to create accessibility towards them, where you can invest in the highest performing, top performing fund managers, high yield assets, without having the need to go ahead and put in $250,000 or $1 million into play, right? So that's what Invinex is. We want to democratize the private markets, the alternative investment sector. And you can find us at invinex.com. We're going to be going to different events in next year. So if you want to join a growing community of investors, head over to our website and you'll find our social links as well.
Perfect. I think we covered a lot of interesting topics that you already mastering or on your long journey to be a master of those. And I think the Hungarian Web3 community or everyone who's generally interested about major challenges when it comes to traditional finance and how the Web3 world can give a cure to that. We learned a lot from those topics. So thank you so much for having this time dedicated to us. and wishing you all the best and hope to see you soon again in person. And thanks again for the listeners listening to us. This is the conclusion of Token Talk podcast. Thanks, Shafiq, to be here again, and see you soon.
Thank you for having me. See you.
Ez a Token Talk Podcast. Hírek, érdekességek és aktualitások a kriptovilágából az Aprémió támogatásával. Mert nem minden kripto, ami fénylik, de egyébként olyan is van.